Stop buying insurance for things that won't ruin you. I mean it. Right now, every month, money slips out of your account for protection you'll almost never use, and because it feels responsible, nobody questions it. But the standard advice, better safe than sorry, insure everything, is quietly draining you. Today I'm going to argue the opposite, and then prove it with 5 policies you should probably drop. Start with what insurance is actually for. One job. Covering a loss you genuinely can't afford to pay yourself. A house burning down, a car wreck, an early death with kids at home. Those are real, life-changing catastrophes. But somewhere along the way, salespeople flipped the idea and started selling policies for tiny, survivable costs. A cracked phone screen, a broken blender, a missed flight, all wrapped in just enough fear that you'd never stop to do the math. So here's the contrarian rule I want you living by. Insure your life, not your stuff. If losing something would only sting your wallet, skip the policy and become your own insurer for small risks. Those little premiums look harmless. $5 here, $15 there, but stacked over decades, they quietly drain thousands you could have invested. Which brings me to the extended warranty, that add-on at checkout for your laptop, TV, or fridge. The cashier makes it sound essential. What they won't tell you is that these plans are one of the most profitable products in the entire store. And think about why. If warranties paid out more than they collected, stores wouldn't push them so hard at the register. Most products either fail in year 1 when the free manufacturer warranty already covers you, or they last well past the plan's end. And when something does break, the repair often costs less than years of warranty payments, or there's a deductible in a maze of fine print that turns filing a claim into a part-time job. So the better move is to skip it and bank the savings yourself. Now the one people fight me on hardest. Whole life insurance sold as an investment. Stay with me, because this one's slippery. Life insurance can be vital. But whole life bundles a death benefit with a savings account, and the math rarely works in your favor. You pay high premiums for decades. A big chunk feeds fees and commissions instead of your balance, and the cash value crawls upward at returns that often trail a simple low-cost index fund by a wide margin. For most families, there's a cleaner path, and it has a name: buy term and invest the difference. You get cheap term life covering your working years, then invest the money you saved on premiums. Same protection, far more growth. And honestly, ask who even needs life insurance. People who depend on your income, kids, a spouse, shared debt. If nobody relies on your paycheck, you may not need a policy at all. Don't buy a solution to a problem you don't have. Let me hit you with a number, because this isn't just my opinion. Consumer studies have shown extended warranties can be wildly profitable for retailers, with a large share of what you pay never coming back to customers as claims. That gap between what they collect and what they pay out is the whole giveaway. It's the business model. Third on the list is the pile of tiny niche policies, and this is where companies quietly nickel and dime you. Phone insurance, appliance protection plans, pet wellness add-ons that aren't even real insurance. Each one feels small, but together they're a serious leak. Take phone insurance, where you might pay around $15 a month plus a deductible of $100 or more just to file a claim. Over 2 years, that's hundreds of dollars, often more than simply buying a replacement outright. The better play, build a small emergency fund and let it be your insurance for these little risks. A few $100s set aside covers a cracked screen or a busted appliance with 0 monthly premium bleeding out. Fourth, and this one's sneaky, coverage you already have sold to you twice. Rental car insurance is the classic trap. The clerk pressures you while you're tired and just want the keys, but your existing auto policy or your credit card often already covers a rental, so you'd be paying a second time for protection you've already got. Same story with credit card payment protection and most travel insurance bundled into pricey tickets. And then there's flat-out junk, accidental death policies that only pay in freak scenarios, mortgage life insurance that shrinks as your loan does while the premium stays put, flight insurance for a crash that's astronomically unlikely, fear dressed up as safety. So here's the single test that cuts through all of it. Before any policy, ask one question. If this thing breaks or is lost, would paying for it myself ruin me? If the honest answer is no, you don't need a policy, you need savings. And the way you use this isn't to cancel everything in a panic, it's to go line by line, calmly, separating the catastrophes from the inconveniences. Catastrophes stay insured, inconveniences move to your own emergency fund. This week, run it as a few clear steps. Pull up your bank and card statements from the last few months and hunt for every recurring charge with the word protection, warranty, or plan. For each one, ask the magic question. Could you cover this loss from savings without real pain? And if yes, it's a candidate to cancel. Before you buy anything new, check for overlap. Call your auto insurer and card company and ask what your rental coverage already includes, because one 5-minute call can save you from paying twice for years. Then take the dollars you free up and give them a real job into a starter emergency fund first, then into low-cost investing, so the same $15 that vanished on phone insurance compounds for you instead. And keep the insurance that actually protects your life, solid health coverage, real term life if people depend on you, disability insurance since your income is your biggest asset, auto and home liability. Those are non-negotiable guardians, not waste. One gentle word of permission. You're allowed to say no at the checkout counter. You're allowed to cancel a policy that no longer serves you. That little wave of guilt the salesperson plants is a sales tactic, not your conscience. And don't beat yourself up over the ones you already bought. Almost everyone has signed up for waste at some point. The win isn't being perfect. It's noticing the leak today and shutting it off going forward. Picture 6 months from now. You've trimmed the waste, padded your emergency fund, and you finally understand exactly what every policy you own is for. A few canceled policies might free up $50 a month, and invested steadily over the years. That's not pocket change. That's a real, growing cushion built from money you were already losing. You're not being cheap by cutting these, you're being precise. Smart money isn't about spending nothing, it's about spending only on what truly protects you and refusing to pay for fear dressed up as safety. So tell me, of these 5, which one hit you the hardest? The extended warranty, the whole life policy, the phone insurance, the double paid rental coverage, or the junk fear policies? Drop the number in the comments, I read them. If this opened your eyes even a little, hit like so. It can reach the next person getting upsold at a register. And do me one favor, send it to the one person in your life who says yes to every add-on without blinking. And subscribe, because next time I'll show you exactly where to redirect that reclaimed money so it actually grows.